Hey folks, welcome to the first ever startup tank of 2013 or 2023. Wow, 2013, that was a while ago. Think about where you were 10 years ago. Think about where the climate space was 10 years ago. Thank God things have been moving forward a little bit. I'm your host. If this is your time, my name's Matt Ward. I run Forward VC. We invest in companies that move the world forward. We run an accelerator program that's incredibly hands-on and focused on growth, sales, traction, and really getting climate companies up into scale so they can raise a real round and change the world. Today, I'm joined by a couple of incredible investor panelists. Before we get into that, though, if this is your first time to the Startup Tank, I need to tell you a little bit more about us and what we do. We're basically the Shark Tank or the Dragon's Den for climate companies. We get companies who are building, changing, and improving the world. We have them on here alongside 2 or 3 other investor panelists. We try to get some deals done. We try to get some exposure, and we try to make big things happen. If you haven't checked us out, thestartuptank.com for more details and to apply. If you're a pre-seed to up to a pre-series A company, then we could be just the fit for you. And for our accelerator, pre-seed and seed. The Startup Tank is brought to you by Valbon by Carta, and Carta bought them now. They're pretty much the big and only player in the space. They're the ones that we love for setting up SPVs and allowing us to invest in companies via our syndicate when we do post-accelerator rounds. If you want to learn more about Carta and what they do, visit forward.vc/Carta for more details to set up your SPV, get a special deal. If you tell them that the Startup Tank sent you, you'll get some money off your SPV or money off some of your ESOPs and other employee management cap table services. And then the Eugen Agency, who is our go-to, and we'll talk a little bit more about them in a bit. They sponsor the show with design prizes for the participants. So our startup of the night, we're at the end of the night, after all of our companies have had a chance to pitch, myself and the investors will go through, we'll rate our favorite companies. Kind of, I guess we've got 4, maybe we just pick a favorite or a second favorite, and they'll win $5,000 in free design services. And that's Eugen Agency, just forward.vc/Eugen. That's that's YUGN. Sometimes a little tough to spell. It's been a long one. We're getting back from the holidays, too much eggnog perhaps. Well, either way, I want to thank you guys all for tuning in, and I want to pull in my awesome other investor panelists so that they can share a little bit more of what they're doing, and we can then get into the Startup Tank. So first and foremost, Melissa, you want to kick things off with FINCA? What do you guys do?
Yeah, happy to. So my name is Melissa Tickle. I'm an investment manager for FINCA Ventures. We're an early stage impact investor that invests across emerging markets, so mainly Sub-Saharan Africa and Latin America, within financial inclusion, agriculture, and health. And then most relevant for today's conversation, we closely look at the intersection between agriculture and climate and are investing in solutions that really touch on both adaptation and mitigation efforts among their key stakeholders. So really looking forward to being here and hearing the pitches today. Thanks.
And that's why you're here. And Ted, do you want to take it away with Clean Energy Ventures?
Yeah, I'm glad to be here, Matt. So Clean Energy Ventures is a traditional venture capital firm. We invest in early stage climate tech. So we really specialize in helping those very strong technical teams transform into very strong commercial teams. And there are a couple of things that make us different. The biggest one is actually our greenhouse gas emissions reduction threshold. So every company we invest in can mitigate 2.5 gigatons of CO2 between now and 2050. There's actually something we calculate early on with the company when we're in diligence. We're also known for being very hands-on investors, and we tend to be very technical investors too. We're very hardware focused, though we do have software investments too. Glad to be here today. Always looking for great companies, and we're often writing first institutional checks and leading first rounds for companies. So excited to see what we have.
Awesome. And then that brings us to Eric with Aligned Climate Capital.
Thanks, Matt. And thanks everyone for having me. My name is Eric Lee with Aligned Climate Capital. In short, we're a multi-strategy fund manager dedicated to all things climate. So we manage 2 infrastructure funds as well as a venture strategy. I think the venture strategy, obviously, for this audience is the most applicable. So to kind of give a little plug for our venture play, we invest into early stage companies, and we define that as C to Series B, with our sweet spot being the C and A rounds. And we focus in 4 pillars within sustainability: clean energy, electric transport, sustainable land use, and the built environment as our main key focuses. And I guess the ways that we're differentiated from others in the climate world, because there's so many climate tech VCs out there. First and foremost, we focus on proven and commercial technology. So we don't take deep tech, deep science risk. Candidly, we have no scientists, no PhD on the team. We're all investors and business folks at the heart, and we help grow and scale businesses. And then secondly, we actually have our genesis stemming back from the Department of Energy. So our partners are coming from DOE's LPO, the Loan Program Office, what currently Jigar Shah runs. Our CEO, Peter Davidson, our COO, Brendan Bell, ran that under the Obama administration. So having that policy angle and the government kind of insights and know-how really adds value to our portfolio companies. And as we all know, climate and policy go hand in hand. So that's kind of our quick intro.
And the policies are finally starting to change, so we can finally make some impact on the climate side. And for us guys, like I said, I run Forward VC. We have our partner in crime climate accelerator program. We call it a partner in crime because it's literally you, me, and 100 other mentors helping you crush it on your company in the next 12 weeks to get 2 to 5 major new customers, pilots, traction, some grant funding, and then ultimately raise your real round. For more information, forward.vc, so the number forward.vc. We invest in companies that move the world forward, like some of the companies that we've got here today. Now, let me kick out all of our panelists and just hand things over right off the bat to the companies who are going to be presenting. You guys will have 5 minutes on the clock, and we're tough with the time, and then you'll have as much time as needed for Q&A with our investor panelists. At the end of the night, we'll vote on our favorite company of the night, and they'll be our climate startup of the night. They'll be crowned champ, and they will get a special reward from the Eugen Design Agency, kind of the go-to when it comes to design for climate companies. So, Oscar, you want to kick things off with LISUS and tell us a little bit more about you and your innovative energy solution, so to speak?
Absolutely. Yeah. How are you? So should I start pitching already?
Yeah, you can put your screen share on,
Okay,
show what
perfect.
you want to show or how you want to do it, and then tell me when you're ready, and we will kick off the clock.
Yeah. Ready.
Go for it.
Hello, everyone. We are LISUS, and we're a mineral discovery startup finding lithium deposits using AI. And our mission is to enable a net zero world. The increase in the electric vehicle revolution has brought with it a massive demand for lithium. Unfortunately, there are not sufficient discoveries to supply this demand. As you know, lithium is the main component of electric vehicle batteries. In order to address this shortage, it's important to increase the supply of lithium and to do it sustainably. For every ton of lithium that we can bring to the market, we can enable the electrification of 67 electric vehicles, avoiding 4,000 tons of CO2 equivalent and saving 50,000 liters of water. In order to make this a reality, we are using a science-proven technology to find lithium and to improve its sustainability. This is a technology that it's proven, and basically we use satellite data and we analyze the temporal changes in space in order to detect the locations that have the highest concentration of lithium. We do it in a way never done before. The strategy, the way we think about the strategy is in the first stage, we are focused on providing software-based solution and optimizing extraction in lithium sites, particularly on brownfields, which are sites that they already know, but they already own, but they want to expand the efficiency of their operations. But ultimately, our vision is to move upstream and become a sustainable supplier of materials. The really interesting part of our business model is our ability to start as a software company and to move towards selling the materials, which represents a much larger market opportunity. In the last 90 days, we have been working really hard developing a demo. Basically, this demo combines topography, surface, and surface to subsurface in order to prospect the locations that have high concentrations of lithium. Why now? Because the demand for this material is expected to increase by 1,000% in the next few years, and because we are at the very early stages of the electric vehicle revolution. This market is massive. We estimate that the lithium sourcing market represents $1 billion, and the market for electrification enablers, $1 trillion. In terms of the competitive landscape, there are 4 other companies in our sector, all of them sourcing lithium from rocks, which is very unsustainable. We are focused on sourcing materials from brines, which is far more sustainable. and we are a science-based startup. We are a team of immigrants with a combination of skills. Max had experience in the energy sector and holds a master's degree in civil and environmental engineering. And myself, I'm an environmental engineer with experience on remote sensing and satellite data from NASA. But our vision is much bigger. We start as a mineral discovery startup, and we leverage our capabilities to enter the market to supply materials, which represents a much larger market opportunity. Thank you.
Awesome. Thanks for your pitch. And you closed it out pretty quickly. Let me pull in the other panelists. While we're doing that, just quickly, how much are you raising and where are you guys at traction-wise while we bring in the other panelists?
We are raising 2 million. And in terms of traction, we are working in early work with lithium sourcing companies in Argentina. So yeah.
Ted, do you want to kick things off with questions?
Yeah, I'm happy to. Thanks, Oscar, for presenting this. This seems really interesting. Tell me, how is this problem solved today? I'm curious what you're doing differently and why it's better.
So the way they do it now is that they go and they drill a bunch of holes in a particular location, and then they interpolate geostatistically in order to say, okay, here is the location that has the highest potential of having lithium. What we do very differently is that we are able to analyze the temporal changes in order to identify and prospect the location that has the highest concentration.
Do you have a sense of the value to customers that this brings? I mean, do they use satellite data today? I mean, how much behavior change can you influence by helping them make smarter decisions?
No, I would say that's the Series A question, how much value we add. Yeah.
So you don't have an idea then?
No, not yet. We know that it's valuable. We have tested it with resource estimation specialists, but by how much, we don't know yet. We just know that it's cheaper.
Do you have any intellectual property in the pipeline? Or
yes, we are patenting. Yeah, we're patenting one technology. Actually, we started a few weeks ago.
Excellent.
And you can just jump in whenever you want to, panelists, in terms of if you've got a good question, just jump in and go for it. I mean, one major question I have is why not just license to the technology? Are you going to become the mining and sourcing company? It seems incredibly cost and time and expertise intensive.
Yeah, absolutely. I would say that the market is very big, and you know, we could become a very profitable software company with very high margins. But the opportunity to supply the materials to manufacture the batteries is much bigger. And at the end, the most important for us is to solve a problem and to do it sustainably. That's why we decided to start in software and then to go to the supply of the materials.
Oscar, just a quick question. Thank you for your presentation. Really insightful. The one I had in mind is how are you leveraging the satellite imagery specifically? Like, is it a free database that you guys are able to tap into via NASA, JPL, or whatnot? Or are you guys kind of have your own proprietary way of extracting that?
So the interesting thing is that we are using a satellite that was used for something completely different, and we are using it for the prospecting of the locations that have concentration of lithium. So yeah, I would say that's kind of like our secret sauce, and that's what we're patenting.
And what are you looking at? Sorry, go ahead, Melissa.
No, it's okay. Go for it. I'll jump in after.
What are you looking at in terms of the business model, in terms of what initially as software you'll be earning from the mining companies and the companies that you're contracting with, and contrast that to what you then be doing the kind of entire other side of things, building out the mining operation and then selling the raw material itself?
So the interesting value of this technology is that we can expand the value of lithium extraction sites or sites that have the potential or high concentration of lithium. So, you know, we could sell the software and charge, you know, 50,000. But if we, as an example, right, if we try to do like a software enterprise business model, but we decided to actually go into the materials because let's say that we partner with a site that is a lithium extraction site that is worth 800 million. But if we expand the value of their site by 10%, it's 880 million. So that would be the value of the technology. partnering with them and expanding the value of their sites.
But then why do you want to become a mining company?
Ultimately, I think it's important to optimize extraction and to make it more sustainable. I think it's a larger market opportunity additionally.
Okay. Melissa, you have a question?
Yeah, I'm curious what the timeline is for the transition from SaaS to mining, or well, it seems like both opportunities may be in parallel, but at what point will you enter into supplying materials yourselves?
Yeah, I would see it in 3 steps. Step 1 is work in the technology, improve the technology and refine it up to a point that we can optimize to the maximum the extraction of a strategic partner, which is the Series A level. And after that, in the next stage is actually when we start partnering in a joint venture with a developer of a lithium extraction site to ultimately extract it. Why 2 environmental engineers who were activists before want to go into this particular sector? Because at the end, it's going to be the largest environmental problem in the next century. And it's important to start solving it since the beginning. And that's why we decided to go into this particular sector also.
And how many partners do you have currently?
So we're working with 1 right now, and on the supply side, which are on the demand side, which are battery manufacturing companies, we have initial conversations with 2 consolidated companies.
And what's your plan in terms of go-to-market?
In terms of go-to-market, first, we work with the lithium extraction partners, specifically with the resource estimation specialists, and we help them to optimize the value of their sites.
But how do you access them? I know who your customer is, but how do you actually get to that customer and get them to become a customer?
So there are 2 ways. In the first way, we've been identifying who they are and reaching out to them. But also in the mining conferences that they attend, we can also meet them and everything. Max, who is also here, has been the one who has been doing an amazing job at building these relationships and working with them.
Have you run into competitors? I mean, are other people using satellite data to improve extraction, improve siting?
Yeah, the other 4 companies that we mentioned in the sector are the ones who have been very interesting in this particular area. Cobalt focuses mostly on cobalt. RTI has been focused on copper, and the other companies also on copper. I would say our only real competitor is cobalt.
And what prevents them from doing what you're doing in the future? Is that just your expertise and knowledge?
Yeah, it's very different because looking for materials in rocks is very different from looking for materials in brines. What they are doing pretty much is that they are analyzing the spectral signature of a rock and saying, okay, this rock has this particular composition of cobalt, therefore there is this value. And what we are doing very differently is that we are prospecting using temporal changes, and we're focusing on dynamic resources, which are resources that constantly move, such as lithium from brines. It's kind of different technologies.
And how much have you guys raised to date?
So we raised 120,000 from Techstars. We just finished the Techstars sustainability chapter about 3 weeks ago. And we are starting the 2 million round, which is the one that we are doing right now. We've been very conservative with the important thing for us is not how much we raise or at what valuation. The important thing is to find the right partner to actually build together, because this is a long-term game.
Any last questions, folks?
I'm curious how big the team is and geographically where you're based.
So we are based in Los Angeles. We are full-time Maxime and myself. And we are bringing a research geologist who, by the way, started this week. And we are also building a software developer who will start on February 6th. So far, 4.
Thanks.
Awesome. Very cool. Then if that's that, thanks for presenting. what you're doing, LISUS energy or LISUS energy? I'm terrible with LISUS energy. Okay. Well, we were in the ground. Let's keep it in the ground. Let's hand things over to Utkarsh with Elaniti. Do you want to take things away, Utkarsh?
Thanks, Matt. Let me just share my deck here.
Let me get everybody else out of here so you can have the stage be yours.
Okay, can you see my screen now?
I see that you've started sharing. I don't see anything coming through yet. I don't know if anyone else does.
No,
you're blacked out for some reason.
Let me try that again.
I like to say technology is great, except when it occasionally sucks. But we'll make things work, no worries. And if it doesn't, then I will hand things over to our next company.
Okay, let's try that.
Bingo, looks good to go, Utkarsh.
Did that
you find the deck?
Okay, maybe let me just...
Yeah, here. Let me kick things over. Ophir, do you want to tell us a little bit more about NitroFix before while we get that all set up?
First of all, let me unmute myself. And do you see my screen?
Let's see, NitroFix 1.5 gigatons. Let's hear how you're going to do it.
Okay, so 1 minute until it's popping up. Okay, so guys, hi everybody. My name is Ophir Melamed and I'm a NitroFix CEO. So what is our mission? Our mission is to reduce 1.5 gigaton of carbon. And how are we going to do it? We are going to do it by generating emission-free ammonia from fertilizers and for green energy. So if you look at the current market of ammonia, around 200 million tons of ammonia are being produced every year. 80% out of this is going to fertilizers, and the other 20% is for plastic and explosive. And this market is going to grow up to 350 million tons of ammonia. The current production method of ammonia is known as the Haber-Bosch method, which was invented 100 years ago. And at that time, nobody thought about CO2 and carbon emission. And it was really breakthrough because it enabled the production of fertilizers and more crop and then more pollution growing. But for any tons of ammonia that is being produced by the Haber-Bosch method, around 2.5 tons of CO2 are being emitted. So it's around 450 million tons of CO2 are being emitted with the current production method. But this is just part of the story. There's a whole new field of green energy. So ammonia can be used as a carrier for hydrogen fuel or as a maritime fuel. You can use ammonia in the combustion engine of the vessels around the world, and instead of using the current fuel. Therefore, you can save up to an additional 1,000 million tons of CO2 that currently are being emitted. As I said, ammonia can also be used as a carrier for hydrogen fuel because it is much easier to condense ammonia and then to transport ammonia compared to hydrogen. Then on the side where it's needed, you can crack it back to hydrogen. So what we are doing, what is the breakthrough? And it is such a breakthrough. So many people around the world are trying to solve this problem of producing emission-free ammonia. And this is really amazing. We sourced the technology from the Weizmann Institute, from Professor Ronnie Newman, that he was able to do electrochemical reaction with water and air and to produce ammonia. And why it's so amazing? It is amazing because nitrogen has such a high energy barrier to do any reaction, so you have to cross this energy barrier. And to cross this energy barrier, you have to apply a lot of voltage or a lot of energy. He was able to find the catalyst, the right catalyst that holds the nitrogen and reduces this barrier and enabling having the reaction at low voltage. The meaning of it is low energy. Meaning of low energy is low cost of production. And this is very important. This is what makes this technology competitive to the current Haber-Bosch. So we are able to do industrial production of emission-free ammonia at a low cost. If we look where we are, so we are seed. So we sourced the technology from the Weizmann Institute where they did everything in a lab scale. And we were able to move to a flow cell, which is more industrial approach. Later on, we are intending to have the stack of flow cells, which the next step would be ammonia generator, which generates larger quantities of ammonia. And of course, think about it. It can be located any place around the world. If you have renewable energy, you can generate ammonia. Think about Africa, think about South America, think about places around the world where you cannot produce ammonia. More than this, we had a lot of discussion with other companies where they need, with the current method, fossil gas. And about the last year, where the pipe of the fossil gas was damaged between Russia and Europe, they couldn't produce ammonia, so they had no ammonia.
1 minute warning.
Sorry?
1 minute warning.
Okay, 1 minute. So who's our customers? So we are aiming the farmers, which has 2,000 acres, and they consume around 100 tons of ammonia. So we are aiming to them, and some chemical industries company. We had discussion with companies that are doing colors to the air and they to dye the air, and they need this emission-free label for all their supply chain. And who's the team? The amazing team. So first of all, me. I'm more than 20 years in the printing industry and doing different roles in the R&D, business development. And I decided to move to climate because I want to do the change in the world. Meital, our CTO, she's amazing. She knows how to take things from the lab and move them to industrial and to product that can produce large quantities. Yehuda Bornstein is a co-founder and a board member. He's a serial entrepreneur in the climate tech, and he's involved in some companies like Prepare, Carbon.
Time is up.
Okay. And Professor Ronnie Newman from the Weizmann Institute. Thank you.
Very cool. How much are you guys raising while I bring in the other
panelists? We are
panelists?
raising $1 million to finalize 2023 and to have our stack cell working. Now we have.
Sorry, go ahead. I was going to say another Yehuda company. We had Climate Crop on, an advisor over there. You want to kick things off, Melissa?
Sure, happy to. I guess my first question, as a customer, are you purchasing one of the ammonia generators, or how are they getting access to the product?
So the intention is to sell those ammonia generator. We started conversation with FBN, which is the farmer business. I forgot the last, and they are willing to be our retailer in North America and in Canada. So the idea is to sell those electrolyzers and to have them. You do need renewable energy. So in Iowa and some location in North America, you do have renewable energy. In Canada, by the way, you have it from the grid itself. So it makes things a bit easier. So to have this generator on the field to generate the ammonia that is needed. By the way, we are generating ammonia as a gas, and this ammonia as a gas can be piped into water and then to have ammonium hydroxide. So you can have 30%, 40%, 50%, whatever you need of the ammonia. You can pipe it into nitric acid, and then you have different fertilizer. So it opens a wide range of opportunities once you have this system.
Mm-hmm. And what is the cost of the system?
So the one that produces 100 tons a year, so for now, what we aim it to be $250,000. $250,000.
And how large of a farm needs 100? You said 100 kilograms or 100 tons of fertilizer?
Tons. So 1 acre requires 60 kilos a year. So 2,000 acres requires roughly 120 tons a year. So this is what we are aiming.
How's the price point compared to traditional petrol-based fertilizers?
So if I can share my screen, so I can show you. Do you see my screen?
Yes.
So those are the prices for the ammonia. So you can see the price. This is the anhydrous ammonia, meaning the gas. Ammonia, of course, it's fluctuated versus the gas prices, but even the minimum one is around $700 or $800. And we are aiming to be at around 1 minute. I need to share it back, but it's in a different. So we are aiming to be around $400 the cost. It's it's a height, the slide is height, so I cannot show it. 400, the cost of the production would be, $300 per ton.
Okay, so less than half then.
Yes, and first of all, you need to understand that you are saving the CO2. So for any tons of CO2, probably you will have to pay a fee. Either it's $80 per CO2, or you can get a carbon credit. So additional $160 are either as positive, or you should add them to the current production method.
What's the biggest challenge you're having right now? Outside of fundraising, of course.
Thank you. So the biggest challenge is now we are moving from the flow cell and doing the flow cell and choosing the right membrane to do the reaction. And we have some challenges, but everything is doable. So currently our electrolyte, it is dissolved within the solution, within the electrolyte. So we are embedding it on the cathode, on the electrode. So this is some of the challenges.
Are there any rare earth elements or other exotic products in your cathode or in your stack?
Sorry, again, I couldn't hear.
I'm curious what else is in your stack beyond the catalysts. Are there rare earth metals or delicate membranes? Or...
So thank you for asking. So our catalyst has no rare metals, so it's known material. So if you ask about other technologies, and you didn't, and I have no time to discuss, but there is another technology that produces ammonia, and it's doing it from lithium and ethanol. First of all, the price of ethanol is roughly the same price of ammonia, so it doesn't really make sense to produce ammonia out of ethanol. But the second thing, they are using lithium as their catalyst, or as the reduction of the energy. So again, it's a rare metal, and we just heard how complicated it is to use lithium and the cost for lithium. So of course, this is less. Anyway, but it's a very nice work from research point of view. We had really nice success, and I think it's deserved.
And from your perspective, what's your timeline to commercialization, like from now to the first generators being sold?
So by the end of 2026, we are aiming to have our 100-ton systems, electrolyzer that produces 100 tons a year. So it's a few hundred kilos a day. So the idea is by the end of 2023, next year, to have everything with the stack, and then start the engineering, but start requiring all the pilot and building those systems, that by the end of 2026, we can start selling those systems.
And then what does the competitive landscape look like, and how have you kind of differentiated yourself from your peers?
Okay, so the competitive landscape, can I share?
Yeah, of course.
So if we look at the competitive landscape, first of all, the price you can see here, it's 300 ton versus 400 ton, and then we can get the emission credit. So it can be up to $160. And also the location, you can save a lot of money if you do it domestically, and then you can save the transportation, which adds to the price of the ammonia. And of course, from politics point of view, you're enabling yourself producing ammonia where you need the ammonia. So if we look at our competitive landscape, so we have Jupiter Ionic located in Australia. So they are doing the reaction from lithium and ethanol. There are two more companies, Remo and Starfire Energy. They are doing something like the current known Haber-Bosch, where in the first stage of production of hydrogen, instead of producing the hydrogen from fossil gas that emits the CO2, they are doing it via electrolyzer. They are producing the hydrogen via electrochemical reaction. They need the same energy that we need, but this is only for the first step. Then they have a second step of the reaction of hydrogen and nitrogen at elevated temperature and pressure. Therefore, they need higher power consumption, and the cost to produce ammonia via their methodology should be higher. So this is Remo and Starfire. By the way, Starfire was established in 2007, and they're having like a full solution of cracking the ammonia back to hydrogen. So they're trying to have the full solution for all the steps, but they have these steps of two steps. Remo was established this year, and they are doing, as I said. In electricity, I put it here because some people are in debate. They are producing nitric acid, which is totally different, but it is fertilizer. So that's the reason it's in the list, but they are producing nitric acid that does not fit to the energy market, which requires ammonia. They are doing it via plasma and energy. It's very nice work, but for our calculation, they do need a lot of power. But again, it's a different technology. Thank you.
Are people able to use IRA credits for installing these devices? Because I imagine that would be a major unlock in the US of they want to get off of Russian fertilizer or Russian sourced, essentially.
Yeah, that's what we think. And as I said, we had a discussion with some ammonia producers in Europe, in Germany, and eventually they have 3 facilities that are not working because they don't have fossil gas. So think about it from political point of view, the freedom that it gives you to produce ammonia whenever you need it. Think about Africa, that you can produce ammonia whenever you need and whatever you want. Even in Israel, it is very problematic to produce ammonia. And by the way, we are a Delaware company. So.
This is published research. Is it patented? Have you filed patents?
Yes, of course. We have a patent. The patent was established by the Weizmann Institute. And Weizmann Institute, we have a contract with them, of course, agreement. So it belongs to, we are the only one that can use it. And any new patent that would be written by Professor Ronnie Newman, which is part of is in our scientific advisor, would be for NitroFix. We are the only one that can use it. It is PCT all around the world.
Great. Thank you.
How'd you meet Yehuda?
I met Yehuda via Weizmann Institute. So we have mutual friends. So he introduced me to Yehuda, and I think it was an amazing meeting because it was like an initial click, him and me just talking and say, oh my God, this is what I looked for. At the beginning, I said, why ammonia? It doesn't sound sexy. I'm sorry, ammonia doesn't sound sexy. But then I started reading about ammonia and I said, wow, this is the holy grail. If it is really working, I'm in. And then Meital went into the lab and she started producing it. And really, she was able to say anything that Ronnie said. She was able to produce it. And then I said, okay, I'm in. And I'm so happy.
And Melissa, sorry for interrupting you.
No, it's okay. I'm curious what you think the biggest barriers are for getting the product solution on the market sooner than 2026.
So I think, although I started discussion, as I said, with FBN, I think changing the way that people are using ammonia, because nowadays they are purchasing ammonia. So now having those systems and producing for their needs, so it's changing the mind. So this can be a challenge within the farmers, although it is not our only market. As I said, we are talking also with some industrial, big chemical industries, which I cannot say the name and I'm sorry, but they are really would be very happy to have those generators in-house and to produce. So from their point of view, it should be quite easy. From the farmer, as it is a different approach, different methodology or go to market, I think it may be a bit of a challenge. Also, we started a discussion with some maritime companies, but they need large quantities. So by the end of 2026, we will be able to produce only 100 tons a year, and they need like 1,000 tons a year. So we are aiming to approach them or to start working with them later on when we will be more mature and we can produce larger quantities. Also, the fertilizer companies, we had discussion with ICL and with the Haifa Israel. Both of them are very big fertilizer company, but they need 10,000 tons a year. And this would take us some years until we will be there.
Would you be able to license the IP to them and then let them build that business so they can replace their existing business with this business? Like I know Yara, Syngenta, Bayer, a lot of the folks that we're connected to.
Yeah. First of all, Syngenta, I talked with Syngenta, and for now it's too early for them. They are not really interested in producing ammonia. We may, but it's too early for us to decide if we want to do so. So yes, it's an option and it's on the table, but it's too early for us.
Understood. Any last questions, folks? Awesome. Then Ophira, thanks for sharing what you're doing with NitroFix.
Thank you.
I'm glad Yehuda made that connection last minute. We got to get you on here. Now a quick timeout before we jump to our last two companies of the night. We had a couple of people. We had two fall out from health issues. So we've got a four when it comes to tonight's startup tank. But if you're looking to pitch, we do this every 2 weeks. Pre-seed to pre-series A climate companies that are making big impacts on the world, the startuptank.com. And if you're looking for a partner in crime, so to speak, to help you with growing the business, raising your round, getting real customers and traction, well, we have an accelerator for that. We've got 100+ mentors whose only job are warm intros and helping you unlock connections like with Bayers and Genta, on lots of other large-scale corporates, etc. You can check us out. More information, forward.vc. And if you're trying to raise a round, we published our VC database, all the VCs, CVCs, accelerators, incubators. There's somewhere between 850 and 1,000 at this point. You can filter by stage, sector, geography, and check size. If you're trying to find that ideal investor, there's probably not a better place to do it. Forward.vc/VC database. You can get everything there. And now let's move on to, we should have a shout out as well. And thanks to Valbon from Carta for sponsoring the episode. They're the best way to set up your ESOPs, manage employee shares, cap tables, or set up SPVs if you're like us, running a syndicate or doing deals with other family offices, etc. And we're brought to you as well by the Eugen Agency, the kind of go-to when it comes to design, graphics, pitch decks, branding, etc. for climate companies. They're sponsoring this. There's going to be an awesome prize at the end for our climate startup of the night. We'll tell you more about that as well at the end. Forward.vc/design, DESIGN, for more details. And now let's move on to we had it in the ground. We were talking fertilizer. Let's get rid of some of the fertilizer now. Utkarsh with Elaniti. You want to take things over?
Yeah, let me try sharing it again. Hopefully second time's the charm.
We'll do a take two. Second time's the charm.
Does it work? Not yet.
Second time's not a phenomenal charm.
Third time's the charm. Let's try it. Okay. Do you see something?
Yes, we have a ox.
All right, excellent. Let me pull it onto the screen. Multi-monitor setups.
High tech. Okay, now we are good to go.
Good to go? Okay,
You ready to rock?
All right, you see it in slideshow mode?
Yep, take it away.
All right, hey everyone. My name is Utkarsh. I am the Chief Technology Officer at Elaniti, and we are trying to make a data-driven transition happen to regenerative agriculture. What if 95% of your food disappeared? Now, that's a very provocative question, but it might actually be a reality that we're facing, because 95% of the food that we currently produce comes directly or indirectly from the soil. And soil is being degenerated at an alarming rate at the moment. Now, soil can also serve as a very important tool in our battle against climate change, because we can sequester tremendous amounts of carbon in the soil. It's estimated that you can sequester 10 billion tons of soil of carbon in UK soils alone. And that's where we're based. And we know that regenerative agricultural practices are the answer. In fact, 15 to 25% nutrient efficiency gains can be seen from regenerative agricultural practices being adopted. And it can also lead to on-farm profitability increases of 80%. So what drives the mechanisms behind these gains? Well, it's really the soil biology, which is the aggregation of the fungi, bacteria, protozoa, and nematodes that exist under the soil. And so soil biology is the driver behind soil chemistry. So do we have a good way to measure soil biology today and monitor it? Well, believe it or not, the best way for us to do it at the moment is a pair of cotton underpants. Farmers are being told by leading agricultural organizations like the NFU and LEAF to literally plant their pants. So what does this have to do with soil health or soil quality or soil biology? Well, 1 teaspoon of healthy agricultural soil contains up to 10 billion microorganisms. And these bacteria and fungi are what actually decompose the cotton in these cotton underpants. So the faster these cotton underpants break down, the better your soil biology is, and therefore the better your soil health is. And that's why these underpants tests, as they're called, serve as a proxy determinant of your soil health. But we think there's a better way. We think there's a smarter, more outcome-focused way to manage this transition. At Elaniti, we measure the soil for biological, physical, chemical factors, and then we correlate and combine that data with historical crop outcomes and historical farming practice data from our partners. And so what we are trying to do is understand how the farming practices that we deploy in our soil affects the soil biology, therefore affects the soil chemistry, and how that soil biology and therefore soil chemistry affects the downstream crop outcomes like nutrient density, yield quality, and disease and pest resilience. And we deliver all of this through a digital measurement, reporting, and verification platform. And what we do here is we support and measure and monitor adherence to different what are called growers protocols that the FMCG or CPG industry is putting out to track soil health improvements for their supplier farmers. And we're kicking this off with a pilot that's currently ongoing. In fact, my co-founder Scott and Nimisha are out in the UK at the moment testing the soil for our pilot participant farmers. Our pilot covers 2,000 hectares. It's focused on winter wheat, so it's focused on farms that are primarily growing winter wheat. And we are partnering with CamGrain, which is a very large grain cooperative based out in the UK. And our research partners are Rothamsted Research, who are a long-standing agricultural institute in the UK. Now, this partnership is very important because CamGrain allows us access to their customers, large FMCGs or CPGs like Nestle and so forth, to actually run our pricing discovery and run our value discovery. But we also, through them, get access directly to the farmers because they represent over 500 farmers. As far as the competitor landscape is more of a competitor ecosystem. This is a very uncharted area of science, of data science, and so different entities are taking different approaches. We actually think that we are able to work and collaborate with a lot of the competitors that are on this slide. But as far as the space goes, there are entities like Stenin or Yardstick, and they're primarily focused on carbon quantification in a proximal way. So you stick a probe into the soil and you run carbon quantification. We want to mix that with biological quantification. Then you have your remote sensing companies like Vomitra and Regrow, and they're primarily focused on top-down optical measurements, but we also mix that with proximal data. Then there are DNA-focused startups like Trace Genomics and Biomakers, who are lab-based and who provide a lot of very in-depth data on the soil biology. And then, of course, there are agronomy or farmer-focused entities like CLIM or Climate Farmers. And we want to bring all of this
time is
together.
up. Sorry, I gave you some extra time because I forgot to give you the 1 minute warning.
Oh, sorry.
No, all good, all good. Let me bring in the other panelists. While I do, one of the big questions I had with this is just how you scale the business and how you build it into something sustainable. That was something when we talked last time, and I'm curious where you're at in terms of thoughts on that and outlook for the future.
Right. So we're currently focused on this middle layer of the agricultural supply chain. And so those are the grain brokers or the grain cooperatives, farming cooperatives that represent a lot of farmers. It's quite difficult to build a viable business going directly to the farmers because they're very scattered and it's hard to actually reach a large number of farmers. So at the moment, what's happening is a lot of the FMCGs or CPGs, they're introducing financial incentives to get their supplier farmers onto regenerative practices. And so they want to disseminate these incentives to farmers based on improvements, but there's not really a good way for them to directly track and monitor that performance or to determine who deserves what level of financial incentive. And so they're tasking these middle layer brokers or their tier one suppliers with that objective, with determining which of their supplier farmers actually deserve those incentives. And so our collaboration with CamGrain is quite key, because that's exactly what we're helping CamGrain do. We're helping them determine how to disseminate some of these incentives, or how to measure farmer performance across their portfolio of farmers. And so our eventual goal is to measure or monitor adherence against a specific FMCG or CPG, as it's known in the US, protocol, and then scale our platform to support several protocols. So you can almost think about it as a Credit Karma view, where there's a credit score run by TransUnion and Equifax, and in this case there might be a protocol from Nestle, and one from McCain Foods, and one from Weetabix. And we would be able to show each farmer their adherence level to each of those protocols, because we are pulling from the same common repository of data. And we can also tell them where they might be able to unlock some of these financial incentives. So our goal really is to start off with this middle layer, and then go top down and start going directly to the FMCGs and start rolling out across their tier 1 suppliers.
I'm curious, what is your, just probably didn't get to it in slides, what is your business model? And also, what's the balance between software and kind of consulting or field services that you have?
Yeah, so our business model right now, if I can share my screen real quick. We're a pre-seed startup, so we're running our pricing discovery at the moment, with CamGrain, and we're approaching some of their customers, trying to come up with this price point together. But we think that we are quite cost competitive at about 80 pounds per hectare price point. And this is about a 2% increase or 2% premium on the cost of the underlying wheat itself. So in our case, we're focused on wheat farming. So that's about a 2% increase per hectare, or 2% premium paid by the FMCGs for this service. Now, a very important principle for us is we are not charging the farmers for any of these services. It's very important for us to keep that as a principle. But again, we are still determining that price point. It depends on some of the discovery that we conduct with these customers. But we have seen indications from the market. For example, in the UK, Arla is paying about a 2% premium for dairy that's produced using regenerative practices. So we think that it might be a viable price point. And sorry, Ted, what was the second part of your question? The software and...
what's the balance of software versus services? And I believe you mean hectares per year, or is this a one-time cost?
This is per year. The testing is ongoing. So, you need to track the improvement of the soil biology and the soil chemistry year over year. Potentially, you could do once every 2 years because these changes are not that rapid. And the second part of your question was software versus consulting, right?
Correct.
Yeah, so the way that we're rolling out our pilot at the moment is the farmers are quite accustomed to receiving data on soil physical characteristics and soil chemical characteristics, but they haven't really been receiving any information or interpretation of soil biology. And so our collaboration with Rothamsted Research here is pretty key, because in addition to my third founder, Namisha, who's a soil scientist with 15 years of experience in soil science. We also have support from Rothamsted Research and their cohort of scientists who have specialized in the wheat microbiome to interpret a lot of this information. And so the way we're going to run the pilot is a bit more on the consulting end, because we'll provide human-oriented or human-in-the-loop interpretations of this data. But that's where my expertise comes in. So I'm an applied data science and ML person. And what we're going to do is start linking and organizing some of those insights that the scientists come up with against some of the factors or heuristics that they use to come up with those insights. And so eventually we can start automating some of that advice. So there's a larger coverage or more efficient coverage of acreage for every single soil expert that we need to keep in the loop.
Just had a quick question on how you guys conduct your operations. So are you guys actually going onto the farm site yourself to get the soil samples, or are the farmers mailing you guys so you could do it, without being on site?
Yeah, so for the pilot effort, since it's a fairly limited area, we are doing it ourselves. But we'll that's something that we've considered as a possibility. We would need to give advice to the farmers in terms of the mapping of the samples, because every single sample that we collect is geotagged and time tagged. So, you know, the experiment or the sampling strategy, or like exactly where you take samples in subsequent years, it doesn't have to be at the same spots. In fact, there's a larger advantage if you take it in different spots to get like this aggregated view, right? Because you can start interpolating some of the data based on that and get wider coverage. So we would be open to kind of having the farmers send us some of the sampling, or we're also considering having some samplers go out there and test. It really depends on that price point, you know, how the economics line up. But yeah, for the pilot effort, we're doing it ourselves, and it takes about a day of testing for covering maybe about 100 acres or so, or 100 hectares.
And going back to Ted's question on the business/revenue model, with regards to the 80 pounds per hectare per year, is that just the software, or is that the consulting, or is that the blended fee?
That's the blended fee. Yeah, that's for the entire service.
Okay.
What we're providing is really on the farming side, we're providing them with. So one thing I wasn't able to mention is we'll sort of run this as like a healthcare product where, you know, just like in healthcare, you have PHI. So you can give aggregated insight at a population level, you know, to someone that's interested in looking at the overall health. But for a singular patient, you would only give them their private information. We're running a very similar data architecture. So on the farming side, we'll be able to give farmers very, very detailed and customized insight in terms of how to improve their soil. But at the FMCG and grain broker level, we'll be giving them aggregated baseline information so they can look at the population as a whole. So we're providing this sort of traceable assurance on these incentives actually making an impact to the FMCGs. And then for the farmers, we're actually more directly telling them how to improve their soil, right? Which is sort of going back to the first principles of what matters to the farmers. But yeah, for this entire service, we are going to be charging the 80 pounds.
Why not insurance broker so they could get a cheaper premium because they have healthier soil?
Yeah, that's something that, I mean, it's mostly just from a simplicity perspective, you know, that's something that we've definitely considered, and it's you know, potentially revenue generator for us as well. That's something that a lot of farmers have brought up to us. A lot of our partners have brought up to us as well. It's just not something that we're very actively considering at the moment, you know, but it's something that we will definitely consider in the future. And there is that element, you know, because the soil biology almost serves as a futures market for your soil carbon market, right? Because the biology changes much more quickly than the chemistry. The biology is kind of coming in and out, and then you can have like a futures outcome, like 5 years down the line, and predict how much the soil carbon is going to change or not change. So even from like a carbon perspective, there is potentially levers that we have there for this data.
How deep do you have to get to measure the samples?
It's so we use these soil cores, you know, it's anywhere between 10 centimeters to 20 centimeters deep. It depends on the soil compaction.
Could a drone do it?
I think there's some work that's happening in this space, but we haven't really explored that, mainly because we actually want to go and have like a chat with the farmer in the morning of the testing to understand like where there might be aberrant or interesting, you know, behaviors within the field. And so we're actually running the experiment design the morning of as well. And so for our pilot effort, at least, it's better for us to collect it in person. But yeah, in the future, that's something that we might consider if it's able to go deeper.
Are you worried about any pushback from the fertilizer companies? Because I'm pretty sure their product are killing the soil health. So the more you guys test, the worse they look, than vice versa.
Yeah, I think that's a pretty nuanced, you know, situation, because it's not like you can switch wholesale to regenerative practices and quit the application of all chemicals cold turkey. You know, the way the situation is right now, the soil biology is just not going to be able to support it. We saw this in Sri Lanka, you know, a few months ago, where they banned a lot of the agricultural chemical inputs, and they ended up having a catastrophic failure of their crops because the soil biology, at least in its current state, is unable to fix some of these chemicals for you. Now, that doesn't mean that it cannot be, brought up to actually support that. It can, but there's a place for all of that, right? Like what we think is we need more precision applications of chemicals because there are advantages to some of this. If you switch to regenerative practices, most farmers tell us that they need to use an increased amount of herbicide because they start getting a lot of weeds that are out competing the crops. And so even if they stop using fertilizer, they have to use herbicide. And so what we are trying to find is that optimal point where there's yield stability with the application of these chemical inputs at the right level so that the soil biology can still recover harvest cycle over harvest cycle. Of course, it's not going to recover as fast as if you just let the land rewild, but that's not really the objective function for agricultural land, right? For agricultural land, the objective is to get crops out of it. And so that's why our objective function is crop stability. And at the moment, that includes chemical application as well as healing your soil biology. So that's the I guess the kind of golden medium that we're trying to find.
Awesome. Any last questions? It looks like Melissa.
Yeah, thanks. I'm curious if there are any limitations for where you can work geographically, or understanding that this first customer pilot is in the UK and what your plans are going forward.
Yeah, so so for our technology, it's quite crop specific, right? So when you start building these algorithms out, it's going to be specific to a single crop type. So not that we're targeting wheat right now because we're based in the UK, and wheat is the most the largest crop by area, as well as volume in the UK. And so the natural next step for us would be to target countries that have large amounts of wheat production. So we're actually attending a program in Australia that's a collaboration between the UK government and the Australian government, and we're going to be trying to build some relationships there as well. Australia produces a lot of wheat. We've had some promising discussions with universities in the US as well, although we're quite focused in the UK at the moment. Another advantage that I wanted to mention is this is not something that we really look deep into from a pricing perspective. But one of the advantages of this sort of ML-driven approach is the weakness of a lot of small holding farmers, right? Is that their land holdings are very scattered and fragmented, and so a lot of agricultural businesses or innovation, they want to target the 1,000-hectare farms, right, rather than the half a hectare farm somewhere in India. And in this case, the diversity of those data points actually works in our favor because no farmer is going to run their or manage their land in the exact same way. And because we're trying to get as many data points as possible to understand the links between farming practices and how the soil biology is modified, we think that we can actually provide this service to a lot of these countries that have small landholders, subsidized by these large industrial farms in developed countries, because it's going to help us run our algorithms that produce better results for those same developed countries. And so we think that this might actually be a really virtuous cycle that doesn't ignore a lot of those farms, that doesn't just focus on industrial farming, but can actually go and have a much larger impact.
Okay, and I think that's that. Any last questions, folks? No, and then sure you guys are starting to get hungry, so why don't we switch over? We've been a little in the food. Let's get even deeper in the food. And before we do, if you're watching on YouTube, hit the subscribe button. Make sure you subscribe so you never miss a thing. If you want to pitch, if you're an investor looking for incredible companies, or if you're just trying to get more involved in the space, forward.vc. We invest in companies to move the world forward. And we've got a Slack for climate founders and another one for climate investors. So you can network with folks there. Folks like Courtney with Akua Burger. Well, let's talk to the world's first kelp burger and see what the future of plant-based looks like. You want to take things away, Courtney?
Yeah, thank you, Matt. I'm very excited to be here. I'll just share my screen real quick. See a little bit.
You just let me know when you are good.
I will. It's just not on the right slide. Sorry. Okay. I'm Courtney Boyd-Myers, and I'm the founder of Akua. And I'm really excited to be here tonight. We are building off of the whole regenerative agriculture, the presentation we just heard. So now you guys are all versed on that, which makes my life easier. We are building a company to be a global pioneer in a new sustainable food category, which is ocean farmed sea greens, which is a form of regenerative agriculture, but in the water. Sorry, just hit the next. Okay. We are all on this call because we know we are facing a climate crisis. I think most of you probably also know we're facing a human health crisis. I see those two as incredibly intertwined. You know, we learned a lot about soil health and soil degradation tonight, and the lack of vitamins and minerals in our soil is a huge issue with our food. We are looking towards the oceans, which are still very rich in vitamins and minerals, and we take ocean farmed kelp and we turn it into delicious award-winning plant-based products like our kelp burger, the world's first, which can't, yeah, a crab cake and ground meat. So if anyone on this call is familiar with ocean farming, that's amazing. I've been building this company for 5 years now, and it's definitely having its moment in the sun. But if you're not familiar, I'll explain it. So you're looking at all the beautiful kelp in this photo. We work with a network of farmers in New England, so all locally sourced. The idea here is, unlike anything that you've probably had to eat or drink today, kelp grows abundantly without using fresh water or dry land, which makes it a really interesting future food, since those are the two most taxed resources on our planet when it comes to growing food. The other interesting thing is kelp, it's a macroalgae and it grows through photosynthesis. So it's taking in CO2 as it grows its body mass and essentially exhaling oxygen. So it's really helpful in deacidifying the oceans. We are just getting started, but our impact is pretty cool. I don't know how many other companies can say that in just a few years, we've removed 6 tons of harmful CO2 from our seas by selling 300,000 kelp burgers and 6,000 pounds of our ground meat. We've helped to avoid nearly 1 million pounds of additional CO2 that would have been created if you had eaten that same amount in a factory farm raised beef. We also just launched our crab cakes. We've sold 10,000 to date, so we estimate we've left about 10,000 happy crabs in the sea. The second, problem, if you will, that we're addressing is really driving this plant-based movement forward. I was raised on all the boring veggie burgers that are filled with, soy and beans from the 1980s. And then, over the past decade, we've seen this rise of the fake meat, as I call it, plant-based movement, which is a lot of really overly processed synthetic ingredients. How else are you going to make a burger bleed and taste that close to meat? But the flip side of that is these products are actually not healthy, and you shouldn't be eating them every day, and definitely not feeding them to your kids. So come in with all of our products, the kelp burger as the sort of emblematic hero product we have. So we're looking at kind of this return to plant-based eating, but using much more kind of modern and regenerative-based ingredients like kelp and mushrooms that sort of supports an ongoing and more plant-based diet. So we go after flexitarians, not just vegans, people who are looking to add more plant-based delicious foods to their diets. Last year's was a big one for Akua, 2022. It was the year of research and development for us. We had one full-time and one part-time food scientist, and we worked really, really hard to create 9 new products last year that we'll be bringing to market over the next 18 months. So sorry if you're hungry, but basically we have these delicious 2 new SKUs of our kelp burger, lemon and herb and chili sesame. We've got 2 SKUs for kids coming out next summer, which are mini sliders, barbecue and regular. The ground meat that I've mentioned, crab cakes, kelp jerky 2.0, and most recently we just crushed it on our sausage links and our breakfast sausage. I wanted to sort of shout out this product because SpongeBob is a celebrity for sure, and we're really excited to have just signed a deal with Viacom that basically allows us to put SpongeBob on our kelp patties for kids. Why this is exciting. So you see a lot of CPG companies today.
1 minute warning.
Partnering with celebrities. And the idea here is that SpongeBob adds a lot of validity to a kelp, which can be seen as slightly niche. So We are right now raising $2 million. This is a bridge to our Series A. To date, we've been backed by dozens of amazing investors and hundreds of amazing founders. Right now, we've been trialing all of our products online, and we've been moving into independent retail, now moving into more national grocery chains, and hitting our first conventional grocery store this month, 300 under the Albertsons banner. You can find us here in over 500 grocery stores. We're also moving into food service. And from our financial highlights, this is where we look at our projections over the next 5 years, retail making up the bulk of this, but of course, SpongeBob, food service, and online sales as well. So I'll pause there. I went through some of those a little quickly, but didn't want to go over the 5 minutes, and I'll open it up for questions.
No, you nailed it. Thank you. I'm going to pull in the other investor panelists while I am. Is kelp a complete protein? That's one of the challenges. It's not. Okay.
Kelp's not a complete protein. It's more heralded for its vitamins and minerals. So it's a sea vegetable, right? And I think what's interesting about kelp is that it has this like rich umami flavor to it, especially when paired with mushrooms, which is what makes it an interesting meat alternative from a taste profile. But we use textured pea protein and water lentils to build out the protein in our products.
What do you have in terms of IP from preventing other people from doing the same? Because you're the first, but where's the second?
The second's come out. So it is a little discouraging in food to be going after patents. One, as you guys are aware, patents are very expensive. We look at companies like Beyond Meat that haven't even been able to get patents. It is like, and they've raised a lot of money. Impossible just had their patent pulled in Europe because again, it's like not something with a food recipe that's generally patentable. Like Coca-Cola is not patented. They call it trade secrets. So in terms of building that moat around our products, it's keeping our recipe in-house, making product development and coming out with new products like a huge priority so that, yes, even if a company comes out with another kelp burger, they don't have these 9 products that we're launching over the next, 18 months. So it's about just staying ahead of the curve, building the brand, and building as much brand awareness as we can.
What's the strategy to do that?
Well, I think our marketing is very, very, very strong. This is my first time as a CEO, but I've worked as a CMO for over 30 companies, mostly consumer tech. So I understand how to build businesses, particularly online, which is where we started. Now we're moving into retail. I think, I mentioned SpongeBob. I think that he's like a huge, sort of well-known figure. I think it's like 93% global recognition. And the idea here is like, he's one of our marketing tools to help allow to uplift kelp, which is a new food group, and help us move from kind of the more natural independent grocery stores that a lot of you might shop into a more conventional mass retailer.
Don't be a SquarePants, eat a kelp burger.
Exactly.
I like it. I like it. Very cool. What do you view as the biggest challenge for scaling the brand?
Yeah, I mean, I think any CPG company really struggles with margins getting into a retail business. So like, you have a product, you want to use all the best ingredients, right? So that's already going to make it you're expensive. You then have to pay your manufacturer to make the product. You then have to pay your brokers to sell it, your distributor to distribute it, your retailer takes a cut. And consumers more and more, especially as we head into a recession, are very price sensitive around food. So I think that building the business, scaling, and improving your margins over time is definitely the biggest challenge with Akua, but also with the industry at large.
Building on that, I'm curious where you source your kelp and how big that market is. Can it keep up with you if you expand quickly?
Yeah, and every investor asks this question, so it's totally fair. So we source right now 95% of our kelp from Casco Bay up in Maine. We have a farmer who grows about 500,000 pounds a year. We just, sort of the size of our business right now, we just bought 70,000 of those pounds. In Maine, they grow about 3 million pounds. So of course it's, growing as well as all of the kelp companies are growing. And then where we're also sort of building out a new supply chain to protect from, well, what if we outgrow Maine? And what if more and more companies come in and buy from Maine? Alaska is coming online and is about to just, pun intended, blow Maine out of the water with how much kelp they can grow up there. So if Maine does about 3 million, they're going to be doing about, and after 10 years in business, Alaska's going to be doing about 30 million in its first year. Then let's say like Alaska and Maine, they both just are wiped off the face of the earth for whatever reason. Canada is the second largest supplier of kelp in the world outside of Asia. So, we have a few steps to get to before we even have to look beyond North America.
That's great. Thank you.
And just jumping in here as well, how does the price compare to like Beyond Meat Impossible burgers versus traditional veggie burgers and even just regular burgers?
Beyond Impossible is who we priced the product in line with. So $6.99 for a 2-pack on shelf. The veggie burgers like Hillary's, Dr. Prager's are definitely cheaper. So we're going in as like a premium product. And obviously we'll hopefully drop the price over time.
Why are you doing this?
It's a great question. Thank you for asking. So a couple of reasons. I grew up in a big food family. My dad was leading marketing for companies like Pepsi and Frito-Lay and Burger King. He actually helped create the Burger King Kids Club. And as a result of being around and marketing and eating all of those types of food, I watched my dad give himself 2 heart attacks, 2 types of cancer, and diabetes. He's still kicking. He actually helps run the Akua mailroom, so to speak. And I think any founder who starts a healthy food company is either personally affected by some health problem or someone they love is. So I got on the rampage around healthy eating from a very young age. And for me, eating plant-based was always something that just felt healthiest for my body. Pair that with like the journey, I think, again, all of us have been on over the past 10 years and just waking up to everything that's happening with the planet. And I just woke up from a dream one night while I was working as on the global team for Raya, which is an amazing dating app. And I had this dream that one day my granddaughter would ask me, Mommy, what were you doing when the world was burning? And I just thought, fuck, what am I doing? And I wanted really to just dedicate the rest of my life to improving the planet and having that be a part of my legacy. And I'm so lucky and so honored to do that within the ocean space as well, because it's just something so near and dear to my heart as like a lifelong competitive swimmer and kite surfer and sailor. So just whatever happens with Akua, I feel like I'm so excited that I get to wake up and do this every day.
If you fail, why will it be? Sorry, there's always that little bit of a lag. I'm sorry. You're up next, Melissa.
I'm curious. So I understand that this product that kelp is regenerative. I'm just wondering, and I don't know as much about it as maybe others on the line, are there any potential negative environmental implications from harvesting or potentially over harvesting in a certain area?
Yeah, I want to be like crystal clear that we do not touch kelp forests. That would be like hugely damaging. It'd be like making rainforest burgers by cutting down the Amazon. Like that's crazy. We are actually working with a whole suite of New England farmers. A lot of them have been put out of work by like big catch licenses by big fishing companies and, disappearing fish in the ocean. And they're making money off of the boats and the buoys that they already have. And so they're going out and they're basically planting the kelp in these bays from a sort of like apocalyptic, like if like there was kelp in every bit of the ocean, it just went crazy. Like, yeah, there could be an imbalance in creating so much oxygen and taking so much CO2 out of the ocean. Like we're playing with nature here. But I think what's important to note is that like we have already a major imbalance, and by taking CO2 out of the ocean right now, we're sort of restoring and getting back to, that equanimity that we need for more, biodiversity in our oceans. And I think we're seeing that now. We're actually seeing like species of fish and shellfish that come back to the areas around the farms that haven't been there in like a decade. We've also measured like thicker shells on the shellfish because of that like less nitrogen in the water, which is really cool too.
Got it. Thank you.
Eric?
You just had another quick question. As you're trailblazing this new space of kelp burgers, and as you're launching new products, it seems like very rapidly, how are you managing like FDA compliance and like all the regulations to stay, compliant?
Yeah, so we work with a co-packer out of Atlanta, Georgia, who every year gets basically the equivalent of like an A+ on all of their food safety standards. The woman who runs the co-packer actually used to work for the FDA. So we work hand in hand with our food manufacturer to make sure all of our products are safe. Of course, the liability falls on the brand, but it would also fall on the food maker. So we get to work hand in hand with people that do this for dozens of brands all the time.
Very cool.
Just one more question on my side. When did the product launch commercially and how much revenue have you made to date?
Yeah, so we had a product before the kelp burger. It was kelp jerky. We've actually reformulated it and we're coming out with it probably late next year, if not early the next year, in partnership with a Japanese distributor. But in that kind of first year of our business, we were selling kelp jerky and we didn't hit product market fit. It was a massive learning. We went way too hardcore on our health goals. The product had 0 added sugar and it was basically like all fiber and like chewing on kelp. But those learnings came for us, which was like, how much kelp is too much kelp to introduce to your average American who didn't grow up eating it. So the kelp burger launched in technically online in May 21 and then into retail in December 21. Now we're pivoting, you know, our goal at Akua is basically we create products in beta mode. We launch them on our website. We, you know, tweak recipes based on feedback, price, pack, et cetera. So in the past year, we've been pretty small in retail, but we've done about $500K in sales. So between most of that is online, and all of our future growth is projected in retail.
Awesome. Any last questions then, or are we good with the burgers? Then
Right.
thanks. Yeah, thanks for presenting, Courtney. Thanks for pitching. Awesome job. I would love to try it, especially as it's not one of these soy-based or disgusting 1 million ingredient plant-based burgers. That would be something I would definitely be down to try. And I mean, keeping with the food theme, we've got one last person, and this person gets a special shout out. This is Paul. And Paul gets a special shout out because he was not on the list of companies to present, but he was a hustler and reached out on LinkedIn during the presentation when I said that we had somebody who dropped out, and he gets the slot because of it. Paul, do you want to share a little bit more about what you guys are doing and how you're revolutionizing food and trying to get rid of this horrible packaging everywhere?
Yes, absolutely. Hi, everyone. And thanks for the accepting the late thing. It was worth a shot, I figured. So shall I present? Shall I start with the deck?
Yeah, go for it. Yeah, set up screen share. Let's see it. And you are good. Your 5 minutes starts now.
Great. So we're starting a new kind of supermarket. We are the first circular supermarket in the UK and the first new supermarket in this country since 2002. Ocado launched a very long time ago. It was like 5 years before the first iPhone. And we think it's time for a bit of a change. Grocery has an enormous pollution opportunity. So 40% of all the plastic waste in this country comes from grocery shopping. Greenpeace did a study in spring last year where they found an enormous quantity at the start. 97 billion items a year get generated by households in the UK. So it's enormous. So what we do is we make it easy for people to buy groceries without any packaging waste. And this is it basically means everything is in reusables. There's no plastic or other packaging waste. We think we can save, in our mid-case model, we think we can save 200 million items of packaging waste from even entering the waste stream in the first 5 years. And it's like 150 million a year and rising after that. And this is 7.6 million tons of CO2 in the first 5 years and almost 5 million tons a year after that. We've done a simplified LCA, which has got those numbers. We're happy to share it. And the idea really is to make it as easy as possible. So absolutely no hassle. This has to be frictionless. And it's all in one place, no decanting, no customer work, make it very easy. We have got a waiting list. They're saying generally nice things. I'm going to skip through some of the slides quite quickly. So some with some words on. We've done some research with our waiting list and with our networks and stuff, asking people if they think they can shop sustainably currently and if they'd be interested in trying our service. This really is the key slide. So our model for how we do the future of grocery. So fully circular means everything requiring some kind of container goes in reusable containers that we collect and clean for reuse. We're going to run locally distributed hubs. And so not like a Get Here or one on every street corner, but more like this is the way to do grocery delivery efficiently. Even Tesco do it like this now. They have 20 what they call urban fulfillment centers, where it's regionally distributed. You want drops close together, you want efficient delivery routes, and you want fast pick speeds. So we're going to set up as a flexible subscription. And the reason for this really is it's the background of myself and my co-founder, but it's also the key to doing reuse well is being very good at container recovery. So part of being a flexible subscription is we want to close the loop and keep it really tight. And to do that, we have to do it ourselves, which means we're going to go to people's houses to pick stuff up. So we go and we collect stuff when we drop things off, and we go high cadence. So we sell people high cadence products that they consume quickly, which means we're selling fresh stuff. So now we're doing your grocery shop. And that's kind of how the evolution of the thinking of the model came about. We're online only, and we're going to build a lot of our own tech. And the idea with range is wide, not deep. So category coverage, we want to cover, in the first year, we think we can do 40% of what you normally buy in a grocery shop. Year 5 is 80% and up, with a low SKU range. So we cover all the type of things you'd like to buy, but we do it in a way that's not tons of choice on each individual thing. I'm going to speed up because I've just seen the time go fast. It's 5 minutes, right?
You got 1 minute and 40 seconds.
Okay, cool. So the reuse order cycle is pretty straightforward. You set up your recurring order. It's like a standing order. You're associated to a hub, and fulfillment happens from that hub. And we pick up empty containers when we drop off. This is a monster. The revenue slide is crazy. The market itself is enormous as well. So if you can sell people groceries on a subscription, it's potentially incredibly lucrative business. Market is ginormous, just the biggest of all the industries, and the space is very big, and there's lots of space for new companies, and fragmentation is one of the current trends. Mintel cites fragmentation and concerns over sustainability as the 2 core trends, and then there's things around legislation, circular economy, and consumer sentiment, which are current and very relevant. Target customer, busy parent, top 40% of households by income, wants to do more eco-friendly stuff, but doesn't have the time. Competition, supermarkets is the short version of this slide. Lots of secondary competition, but supermarket is the main one. Price position, Ocado Waitrose own brand. So mid-premium, if we have to choose, we'll go high rather than stay in the middle, because in a recession, the last time there was a pre-pandemic recession, 2008, people bought high and low and the middle got squeezed. You don't want to get caught in the middle. Customer acquisition is my background. We've done some validation with looking at other similar businesses, and also done some light testing. We think we can do customers for a good number. Zero-ware kind of looks like this. This is the first version. This is how we'll start. It's quite cool. We're not going to use RFID. We're going to use etched QR codes for tracking. 200 uses for a container, and superior design versus throwaway stuff. Some stuff on why we think we'll continue to scale. Basically, because we're a modular hub set up, as we continue to launch hubs, we'll get better at it, and our stuff will get better, and we'll have higher AOVs, and we'll improve as we scale. We'll be improving, so each launch is better than the last. And the teams that are probably the last things. And
yeah, your time is up, but I'll let you get it anyways.
So myself and Mark were co-founders at a company called Tails.com. We've got backgrounds in D2C subscription commerce, Grays, and I've done contracting at Harry's, and Mark was early Love Film and Zoopla. We've got advisors in sustainability, food, ops, and more tech people. And that's most of the, I think that's it actually. So I'm going to stop sharing right there. Sorry, I went through that quickly. 5 is quicker than I normally do it.
No, it's all good. You had to improvise on the fly. It was very good. Ted, do you want to take things away this time?
Yeah, I'm curious how much this cuts in your margin, and what the labor is like to swap things from one single-use containers to multi-use.
Yeah, so swap as in like how just getting food processed in that way.
So are you taking bulk and distributing into reusable containers, or are you also taking single serving items and swapping into reusables?
Understood. A mixture. So some stuff we'll repackage, and some stuff we will send to the suppliers, and they will put it in our packaging. And generally speaking, that doesn't really make a difference in terms of the cost of the scales we're going to be buying at. It's kind of how food works already. If you think that people who make or process food put them in lots of different types of containers already, it's kind of the same. We just have to have it in our minds that our containers will fit within their systems, as well as all the considerations about working well for customers and stuff. Was that what you meant?
Yeah, that's answering my question. Thank you. That was my biggest one. I'm also concerned about customer churn. I mean, do you have stats or projections on how long you can hold a customer? Can you get to I presume the biggest loss of containers is probably when you have a final customer and you don't make that last trip back.
Yeah, so we have we've modeled quite pessimistic churn. So we're pre-revenue, pre-launch, so we have everything is assumptions, but we have plenty of experience in this kind of business model and lots of reference points. We think we've been quite pessimistic with the estimates, and actually think this will be quite grocery is a promiscuous thing anyway. People tend to choose their supermarket based on which one is closest, but this system we think will be quite sticky, because once you have our containers in your house and you're returning them at variable rates, you're kind of in the system and it's quite hard to get out of. And we will, our experience of D2C says, make it easy for people to cancel and leave. We will track your containers, so we'll know what you have. And as you come to the end of your subscription, we'll be able to give you a grace period for returns and probably charge you if not. But yeah, we think retention will be one of the key things, and think it will be quite sticky. Currently, the other examples in grocery at the moment tend to be delivery pass based. And you know, I think it's something like 40% of grocery shoppers have a delivery pass of some sort. So that people like that sort of subscribe be saved type element to it. So yeah, if you can get people to buy all their groceries in this way, though, it can be really, really good. So
that's great. Thanks, Paul.
What is the cost comparison for a consumer when looking at other solutions that are already on the market?
So there's nothing directly comparable here. There are some examples. Modern Milkman is probably the closest business model in this country. I know they started cheap and then had to hike prices. The other variations of circular stuff tend to be really expensive, and there are sort of two broad reasons for that. The two main ways of doing or going and doing your shopping, so online or in store, the existing retail network doesn't really support circular things. So all the circular things are very high effort for customers, so cost in terms of effort, as well as you need to invest in jars, you need to change your system, you need to do a lot of extra stuff. And the retail networks as well, like if you're trying to do circular, there are only a few examples I think are doing okay with it. The problem is you generally have to pay a courier to go and pick it up as well as drop it off. So circular D2C stuff out of one hub, who are using third-party delivery, third-party collection is expensive. So, I mean, even if you try and return something to Amazon, you're probably taking it to drop-off point, and they're like enormous delivery network, right? So two-way infrastructure for this stuff doesn't really exist, and which is why we will build and operate one. So essentially what we're building is a two-way system for circular stuff. And the sort of real extension of what we're doing is, if this works for supermarkets and for groceries, it will work for clothes and electronics and toys and all the other circular things. So really what you're building then is the rails for the reuse economy, and it's a much bigger sort of infrastructure sort of mindset. So cost comparison is difficult, and the way we will think about it from a customer point of view, because really what we want people to think about with our stuff is, it's just where you buy your groceries. It just happens to be that there is no throwaway packaging. And so really, like when we pitch in terms of price for consumers, we're just saying Ocado, Waitrose sort of on-brand kind of price point. The containers are interesting. There's definitely an upfront cost on them. We're modeling 200 uses, which is pretty much what everyone in reuse is using, and we're talking about trying a number of different materials. Over time, we think we can get it to a place where it's very competitive with throwaway packaging. So we build it into the cost of the product. We don't charge more. We don't charge a deposit, and because we're tracking the stuff, we should be able to. We think there'll be some sort of charge system at the very end, or if you never return stuff, or we know you've kept it, or something like that. So. But in terms of like your cost of your groceries, should be comparable with the Ocado, Waitrose territory.
200 seems incredibly ambitious. Assume just like the kid brings it somewhere, it gets thrown in the garbage. You go to someone's house and forget to bring it. You leave it at work. You get stepped on. 200 seems like a lot.
We model a loss rate as well. So think of them as different things. So if it wasn't broken or lost or accidentally chucked in the wrong bin, and it gets returned properly each time, then 200 uses, which is every single reuse startup I've spoken to is using that number. Most of the stuff is made out of polypropylene. We're also looking at things like borosilicate glass, which is Pyrex, and a number of other things, rPET and things. So in terms of straight up uses, it's in line with everyone else. We model a small loss rate, which is like the stuff you said, like it'll just get broken or dropped or accidentally put in the recycling. And then we also model in our actual financial model, I actually use 150 uses, but 200 is kind of the normal one. So.
What's your actual loss rate model of that? So I wouldn't model based off of what other people are modeling. Like Blue Apron had a great business model and everyone modeled off of a similar business model until they realized that it got worse and worse over time. And that would be one thing I would be worried about here is, does it need that many reuses for it to make sense? Because if it needs that many, 200 reuses, how often is it going back to the grocery store? Maybe once or twice a week. That's
like 4 years of use. Yeah,
that's a lot of time.
Yeah, but that's the point, right?
No, that's the point. But I'm saying, can you really assume it's not going to get misplaced at some point or lost or brought to the wrong place?
I see what you mean. So sorry. So the way we model our loss rate is separate. So we say it'll get used this many times, and then we chuck a number in for the speed at which we lose containers. And I can tell you what that is, like just as an example. And also this is just an assumption, and we've kind of done it by working through what kind of thing we think will happen. And like we've actually got it quite high. We've got a 3% return like failure rate every week, which is really high, but it still works. So like we don't think it'll be quite that bad. We do think we'll lose some. And obviously when we're doing an interesting thing with the design of the containers. There's a lot of stuff in the space at the moment about materials and tracking software and things, but the thing that no one's really managed to get or to solve is, how do I sell you this stuff in a thing that I can then get back off you? Like, it sounds really daft, but the actual use the circular system bit is the bit that no one's really managed to solve. And so excuse me. So what we're doing is our first year in our pilot, we're going to try a lot of different materials. So we have our sort of starting point, but the idea is to test a few different things, because there's testing from a sort of operational point of view and from customer point of view. So this is the sort of, I don't know if you've seen the chat from Google, Tom something's video about the desire path, bring the customers on the design journey with you. If you, I don't know if customers are going to care that polypropylene scratches and that it taints and it changes color. Or that glass is heavy, or and then from an operational point of view, there's some interesting challenges. Plastic is really hard to dry. It's quite easy to make it clean, really hard to make it dry. And if you want it to be safe, it has to be dry. So there's, glass is much easier to do that with. So there's some stuff like that where we're going to learn. So we're very deliberately doing a pilot so that we can test out a number of different types of container materials as we go through. And at the end of our pilot, we'll take everything we've learned from a customer D2C point of view, so your normal metrics of acquisition and churn and retention and AOV and stuff, and also what we've learned about containers, we'll put them into a new container redesign project, and then we'll take everything from that into the next fundraise. So what we're doing in this first year is really trying to understand how you make circular work.
There's a ton of competition. How do you make the business model work from a venture perspective?
So there is competition in grocery for sure, but it's such an enormous space. So people spend on average something like £5,000 a year on their groceries. Our target audience more like 7. The amount of customers is enormous. There's so many households. So there's a lot of room for new entrants. And I spun through it very quickly in the deck, but before the cost of living crisis, Intl were calling out 2 major trends going forward. One is fragmentation to new ways to shop, and the other is concerns over sustainability. So we think we have an edge that gives us a good reason to try us. And if we do a good job with execution, we think it would be compelling. So there's definitely shifts in new ways of shopping. The pandemic drove a lot of online stuff, but inside of that, there's a lot of stuff around new ways of buying different types of food. And Intl count things like the meal kits and the veg box delivery companies and the direct wine companies and stuff as part of their the way they assess groceries. But there's so many. We're a bit behind here, but around particularly Europe, there's an awful lot of new stuff in grocery, like an awful lot. We look at Holland a lot, like CRISPR and Picnic, Peter Pot, who are very similar to this there. In the States, the Browns, $38 million Series A in October last year. Peter Pot was 9 million in December 21. I think
But that's what I'm saying. That's what I'm saying. When you have 17,000 different armies fighting, they all kill each other.
But the thing is, we're first at this here. That's what's so strange. So like, I feel like we're, every time I speak to investors, I do feel a little bit like we're a bit early for investment. I think we're bang on time for customers. I think we're a bit early for the investors that don't see it yet, which is an interesting way around. But yeah, in other countries, there are some, but there's not many. So I'll say 1 in Holland, 1 in America, 1 in France called La Tournée. In Australia, there's one called Returner, one of the siblings who founded Keep Cup. And there's a bunch of other smaller variations, but the sort of straight up, we're doing all your groceries with no packaging waste. That's unusual, and there's not that many of them yet.
Okay. Melissa or Eric?
Yeah, just one quick question. Just this is also piggybacking off of Matt's line of questioning in terms of like reducing loss and all that. And this is just a personal curiosity question. Have you thought about gamifying the system where you engage with your customers to say, if you come back 20, 30, 50 times, you get X% discount to kind of keep the retention high?
Yeah, absolutely. There's so much really cool stuff we can do with that. I generally like games as well, so my brain goes to that direction as well. But lots of really interesting things we can do about incentivization, and that runs across not just things like the return of containers, but also things that you can build in a system, things like friend referrals and other things that can get you points or whatever reward system we choose to use. But yeah, I definitely think it's worth including that, and because we'll have such good data, so we will have very, very good what people buy in their shopping data, because all the aiming eventually to do most of the basket, but also we'll have tracked every single container, how it gets used, where it went, what you bought. So as well as rewarding people for being compliant and good about their returns. And we could even do things like, oh, we know you must have finished that thing because it run past its expiry date, but the container wasn't in the box this week. If you add it next week, points, or like there's stuff like that you can do to nudge people and remind people. And so a lot of potentially quite clever things we can do in the interaction inside of it. So we like that quite a lot. And then sort of extensions of that, you can do, when you know so much about what people are buying, you can do all kinds of like smart recommendations. You like this, try that. Here's a free sample, try it next week. So yeah, definitely interested in gamifying quite a bit of it. I think we can, in a way that really improves the experience a little bit as well.
Yeah, and just another question is, I'm sorry if I missed it, like how much are you raising, and how are you planning to allocate that capital across your business needs?
You didn't miss it. It was the last slide that I didn't get to. So it was so we have gone out with an initial target of 250K to fund the pilot. This is a minimum number, and we're currently 60% committed. We have investments include Low Carbon Innovation Fund, some senior and early team from places like Gray's and HelloFresh and Harry's, and then we have funding from another source as well, which I can't talk about yet because there's an announcement embargo. It's another 181K. So in total so far, we're on 330 or so, and we are aiming to get it up over 500 if we can. So yeah, 250 is a minimum. We can do it. So we're already in a place where we can do it. We're just trying to build out to a bigger total.
And the use of proceeds will go towards marketing, building out the team, getting more products in the market. How would it be used?
Yeah, so we have this this plan of this pilot for the first year. The idea with that is the first 3-4 months we're looking for our first hub. It's going to be very deliberately small, and then when we move in, we will do the next 6 months or so of learning, and then taking all of that on to the next round. So a mixture of places. A big chunk of it is just product, but that's going to get covered by sales. So we're cash generative. And so about 40% of early costs will be product, but it'll get covered. Of the rest, about 20% on team, about 20% on rent and OPEX, and about 10% on CapEx. So, and it's actually quite low on marketing. So we currently have less than 10% on marketing. We don't need a huge number of people to get the early learnings that we need. And the small hub won't support a huge number of people either. So with the sort of the experimentation, the testing we've done on what acquisition cost will be, and with the sort of benchmarking we've done against other businesses, we think it makes sense where we're at with it. So is that enough of an answer? I have got full model we can share.
Oh, that's perfect.
Any last questions, guys?
I just have a quick one. Are there any regulatory challenges with product labeling, or I guess in this case, like lack of product labeling for the end consumer?
Yeah, so this is actually a really great question. So food labeling is strict. There's something, so labeling is interesting. We currently intend to label dynamically, which means we will label as we pick. And we will print dynamically, but the idea is to do it in, we think we found a way of doing it without actual labels. So we think we can print directly onto the bottles with washable ink that will come off. the next time we do stuff. But there's quite a few things on safety. So excuse me. There's a thing called Natasha's Law here, which covers a lot of the food regulations. So food labeling regulation. We would also like to do carbon labeling. And there's some quite interesting stuff we can do if we label dynamically, where if you're buying food from one of our hubs, the hub is local to you. So quite a nice thing we can do with where we do have local suppliers, which is something we'd like to try and do. Customers care about seasonal and local stuff as well. We think we can call that out. So we think we can be like, this is from so-and-so's farm, and these are the reasons why that's really great. So from labeling point of view, yes, there's also a bunch of other stuff. We've spoken to a company called, I'm not going to name the company actually. We're leading industry experts on shelf life testing and testing things after they've been cleaned. So to make sure everything's very thorough, we'll be very strict on how we set up our HACCP and stuff, and sort of safety accreditation and things. So because our networks include people, we've worked at Grays and Tails of both food businesses, and a lot of the people who were at Grays and Tails came out of Innocent. So there's a lot of people in our network who are very good at food safety and stuff as well. So we're confident a lot of those challenges will be met quickly as well. So, but yeah, labeling is a really interesting one. We think we can do clever stuff with it, but there's also really interesting. Well, not really. We need to meet certain rules. So,
thanks.
Awesome. Then it looks like we're moving into the last segment of the Startup Tank. Thanks for pitching, Paul, and for all the companies. And now we move into our last segment, which is the Climate Startup of the Night. Here, we kind of say the 1, 2, maybe 3 companies that we were the most excited about, the ones that you would want to set up a meeting with, or you see the biggest potential as a venture bet, and see if we can come to consensus on who our Startup of the Night is. Any takers for going first? Volunteers or victims? I guess I'll go first then. I'll give you guys a pass on this one. So in terms of me and what I thought, I was very impressed by Ophira and NitroFix. And ammonia is like the most pollutive chemical process in the entire world, creating it. And we've seen what's happened with ammonia and fertilizer and the skyrocketing prices in the past several months. They would be, I think, probably my hands down pick for my favorite personally. Although all the companies that presented were doing some pretty interesting stuff and have some pretty big potential. Melissa, do you want to go next?
Sure. I was going to say NitroFix as well. I think in terms of kind of game-changing solutions, when you're looking at the others on the call, that would be top for me. Do you want me to say 2 and 3, or just like
you can if you want to, or you can just stick with one. It's up to you.
Yeah. I think number 2 for me would probably be Akua. I think that there seems to be a ton of opportunity from both market segmentation, but from an environmental perspective. I think that we're moving in that direction where we need kind of alternative types of products that can go into what we're consuming. And it seems like there's a large potential for removing CO2 emissions. I'm very curious to see how that market will develop.
Curious as well, a little worried about the price point, but yeah, go ahead, Ted.
I'm going to go with you. I mean, I think NitroFix is the strongest here. I mean, replacing Haber Bosch is an important technology. And if it can be done at lower cost, it's a huge market. And I admire things that everybody's doing here, but to me, that's by far the biggest market potential. And I see just the most opportunity there the quickest, even though it's, takes time to develop these things with technologies like this. But as soon as you can do that, the amount of customers you have to convince is lower than in a lot of other places. There's no supply chain challenges for those types of things. There's no, exotic materials in the electrochemical cell and things like that. So that stands high for me. I also really admire what Akua Burger is trying to do. I think that market is also moving in the right direction. Price is also something that I'm concerned about a little bit, as well as supply. But I think you guys are all doing great things.
Yeah, 9 products in a year is pretty impressive for Akua. Eric, you're up next.
Yeah, no, it's a hard choice because everyone did a great job presenting and have great businesses that they're working on. I think for me, I would put Akua Burger at first. Just- they've are playing in a validated market, generating revenue from day one. NitroFix is also great. I think it's a longer timeline in terms of you guys to grow and commercialize. So there's a little bit of delay there and kind of generating capital. But I believe that you'll get there. So that's super cool. I also thought that Elaniti, I don't know if I'm pronouncing that correctly, but they were awesome. I think it's going to be a compliance-driven market. I think that to shift towards regenerative ag, it's not only going to be the right thing to do, but I think that regulations are going to mandate that, and farmers are going to start scrambling on how to figure that out. And to have service providers like that in the market validating and verifying that would be super cool. And also with the kind of booming of the carbon markets, there's also tailwinds there for that sector to blow up more.
There are, and I think we summarized it as well. All the companies here, congrats. I think we have a bit of an overwhelming majority though for NitroFix. Are we fine with choosing them as climate startup of the night? Awesome. And this is of course presented by the Eugene agency. So congrats Ophira and NitroFix. You guys are going to get 5,000 British pounds. Was a little better when the pound was stronger, but 5,000 pounds is still 5,000 pounds of free design services from them. That can be on your pitch deck, your website, your branding, landing pages, et cetera, et cetera. And everyone else on the call, all the other startups that presented, you guys will get hooked up with a free branding and brand overview kind of consultation, so they can give you strategies on how to make the business and the branding of your company, your site, your pitch deck, et cetera, look more professional, so that you look like you've already done the seed and Series A and are a real company, which is always important when you're bootstrapping up a startup. Now, I want to give each of the panelists a little chance to kind of tell people where to find them. Ted, where can people find you? What are you looking for?
Yeah, so you visit cleanenergyventures.com and you can fill out an application right there for funding if you're interested in funding from CEV. Our typical investment is early stage hard tech, climate tech. So if you're making a serious stab at reducing emissions, a lot like NitroFix is, then that's the type of company that's right for us. We are considered very hands-on. So if you're also looking to go beyond the dollars and get support in hard tech and industrial markets and how to scale your business, we're the right investor for you.
And Aligned Climate Capital?
Yeah, you could also find us on our website, www.alignclimatecapital.com. Feel free to reach out on LinkedIn. We're all pretty active there, so connect with us. In terms of what we're looking for, as I mentioned in the beginning, our sweet spot is a seed and Series A. And our average check size may be a little bigger than what you guys are looking for right now. It's anywhere from $2 to $10 million, with the average being about $5. But love to keep in touch with you guys, track you guys, and see what the future may store.
And then Melissa.
Yeah, and for me, so you can reach us on our website, fincaventures.com, or reach out directly to me through LinkedIn. We're investing seed through Series A in companies that may not be headquartered in emerging markets, but need to have a team and operations on the ground. Within agriculture, right now we're strictly focused on sub-Saharan Africa, unless there's a financing component, and we would look outside the continent.
And for us at Forward VC, we run our early stage climate accelerator. We take in pre-seed and seed companies, and we do 50 and 100K checks. And our goal is to help you essentially 2 to 5x within the next 2 to 3 months, get you some major pilots, customers, traction, et cetera, so you can be a real business and raise a real round and not have to be begging investors and going through multiple accelerators. For a little more information about us and what we do, just forward.vc. We invest in companies that move the world forward. And once you go through that accelerator, then we'll put you in front of our syndicate as well, which we use Valbon for, and they're our sponsor. We'll set up an SPV. It will make investments, get you in front of our groups, and SPVs with Valbon are really the easiest way to do it, especially now that Assure is out of business, which was quite troublesome for someone who was an early Assure investor, but we'll let bygones be bygones. If you're looking for a great way to set up an SPV, or you're looking to do cap table management, set up ESOPs, et cetera, for your startup, Valbon by Carta is a great way to do it. Forward.vc/Carta. And again, for the design, if you're looking to get design services for your company, for your startup, and really shine, which, trust me, I've seen a lot of pitch decks. your pitch deck doesn't have to be perfect, but it's got to look decent. And otherwise it's getting a pass pretty quick. forward.vc/design for more information, and just tell them that the Startup Tank sent you. And if you like this, hit the subscribe bell. If you're on YouTube, you can check us out and apply at thestartuptank.com if you're pre-seed to pre-series A. And until then, this has been running long. If you're in Europe, you're probably getting hungry. We've seen kelp burgers and lots of food. Let's go grab some dinner, folks. Sound good?
Thanks, Matt. Thanks, everybody.
Awesome. Cheers, guys.